Welcome to the podcast Selling Real Estate with Kelly Cook, where we will discuss the latest and most relevant business strategies to help you do one thing extremely well: sell more homes. We'll discuss everything from business planning to lead generation and conversion to past client customer service and everything in between. Join us for authentic conversations and nuts and bolts takeaways you can implement into your business today. And now, Selling Real Estate with Kelly Cook.
Hello, everybody, and welcome back. We are here for yet another episode of Selling Real Estate with Kelly Cook. As always, we have Kelly Cook with us today to share his awesome insight. How are you doing today, Kelly?
I'm doing great, Elizabeth. Good to be here. Be here. It's always good to be here, right?
Yeah, absolutely.
And I'm excited about this topic. It's kind of a boring one for most people, but not for me.
Well, hey, money can never be boring, right? When you're finding out how much money you're making, how is that boring? So that prefaces it. But today we are getting into finding out how much money you're really making, right? I mean, you're getting those commissions checks, you're getting those splits, whatever you're getting, money's going into your bank account, but it's pretty important to know how much you're spending as well, or what's coming out of it and how much you're actually netting, right? We did an episode on taxes a while ago, how to try to kind of decrease what you're paying in taxes, I guess, increase your income. So this is, along that same vein, just really making sure that you know how much you are actually, bringing in when you run a P&L. And that's what we're talking about today. Profit loss. For a real estate agent, we want to know how you properly run that so that you, are just aware. It's arm yourself with information, especially about your finances. I don't think that there's much more that's important than that. So let's get into it, Kelly. How do you run a P&L for a real estate agent?
Love it. What a great question. Now, hopefully half of the audience will just leave after that introduction, right? Because they're like, oh, that's boring. But I mean, it is foundational, right? Because obviously it doesn't matter how well you budget your personal finances or how much you spend or any of that nature if you don't have anything coming in to begin with, right? Mm-hmm. So what do you have coming in to begin with, right? So you have this thing in real estate called the profit loss statement. Now, with that, you should also have an income statement and a balance sheet. But that's, if you have QuickBooks or something of that nature, that will populate for you and you can have that ready to go. The profit loss is by far the biggest and most important tool that you need in your real estate business. Now, if you're just starting out, I'll give you a hint. You can Google one, I'm sure. I haven't done that, but you can Google one. If you have no idea where to go and you don't have any money for QuickBooks or any software, then start with a spreadsheet and go to the back of the Millionaire Real Estate Agent book. Now, it doesn't matter what brokerage you're with. Now, my team, we're with Keller Williams Realty, but you don't have to be. Everyone kind of agrees that the Bible for real estate business is The Millionaire Real Estate Agent, written by Gary Keller, the red book back in 2003, I believe, 2004. Still extremely
I'm not a real
relevant.
estate agent, and I even have a copy. So
there you go. Yeah. And if you go to the very back, the index, I believe in the very back, there's something called a chart of accounts, which is very similar to what your P&Ls look like. So you can literally go to the back of that book, rip off every single category they have, put it in a spreadsheet, you got to manually type it in, and then work off of that. And eventually you can put your cells in there with mathematical formulas, and that will work, right? That will work. But it's not as user-friendly, convenient, et cetera, as obviously QuickBooks or Quicken.
A little more time consuming.
So obviously use QuickBooks, much more. Yep. There's a lot of reasons why you want to do that. Trust me, it's worth the money, either monthly or one time to buy the software to download on a computer, whatever version you get. Okay. But you definitely want to go there if you at all can. I started with a spreadsheet back in the day. Okay. And then I eventually realized this is getting way too much, right? And not great for the old accountant, right? They appreciate it a lot more when it's in QuickBooks or Quicken.
And you probably realized you could afford it because you were keeping track of all that stuff, right?
Boom. Woo, that's a nugget right there, Elizabeth. Mic drop that one. I was good. You're exactly right. Okay. So what's the essence of the P&L? Number one, the first category is going to be revenue. Okay. Now revenue is not profit. Revenue is not gross profit. Revenue is top line GCI, gross commission income, right? Mm-hmm. When you sell a house and you make $5,000 in a check or $10,000, whatever gross commission, that's what comes in. Okay. Then, and that's before you're split with your broker. That's before a split with a team. That's before any of that. That's before Uncle Sam gets his cut, anything, right? It's top line gross. Then you probably want to have that broken down in different categories, right? And the chart of accounts in that book gives these categories, but you want to have listing income and buyer income and maybe rental income. If you work with land tenants, placing them, or maybe property management, that can be a different category. And then you always want to have like a miscellaneous other income for certain random things you'll find that you can make money off of, albeit maybe not that much, in real estate. Okay. Maybe if you do some wholesaling every once in a while, you have a separate category for wholesaling. Okay. But you have all these categories because you want to be able to break down and know where most revenue is coming from. That way you can obviously continue to hammer that section to, increase your revenue. Then you're going to have below that's your top line. Then you're going to have cost of sale. Okay. Cost of sale. A lot of people call it cost of goods sold, but we're not manufacturing anything, right? In this business.
Selling goods. Yeah.
No. And it's funny how many people say cost of goods sold, but it's not. It's cost of sales. Okay. And that is going to be things like this: split to your broker, split to your team. If you run a team and you have other agents, then they will be listed under the cost of sale, and the split to them will be under there. Okay. Mm-hmm. And then after you do the cost of sale, the net number, when you go revenue minus cost of sale, you have your gross profit. Okay. That's what that's called. It's still called gross because it's not over yet. Okay. Now you have all your business expenses. Okay. Those business expenses go all the way down and are accounted for. And then when you subtract all your business expenses, then you have your net profit before taxes. Okay. Net profit before taxes. Now you have to account for those too as well, right? So then below the line of your net profit, you have your category there for your federal and state tax and things of that nature. Okay. That you're going to have to pay because, as we know in real estate, taxes are not taken out of our commission checks. Mm-hmm. Okay. So you have to pay those either monthly, like I do, or quarterly. Quarterly, I'd probably stick with. I wouldn't go once a year. IRS doesn't like it. You might have to pay a fee if you don't pay by December 31st. So just stick with quarterly.
That just seems like a lot to keep track of as well. Like,
yeah.
And make sure you save up all that money for the whole year. Yeah.
That's the hard part for most people. They can't do that, right?
Yeah.
It's sitting in their account like, ooh, I can go spend that. But that's the government's money. Okay. So don't do that. That's no good. I can't tell you guys how many times, when I first started in real estate, how many people, when I was brand new, I didn't really know what I was doing at all. But a couple agents would be like, well, got to go sell a house now to pay the taxes. Like they didn't save the money. And so now they had to just go try to help a client sell a house so they could just put that whole thing towards just taxes. Oof. Right. That's not the way to live.
And trying that in like December or November, December, that can be a little bit harder to make those sales too. So yikes.
Yeah. In Arizona, it's a little easier, right?
That's true. That's true.
But yes, most places in the country, that is a correct statement, right?
Yep.
So don't do that. Learn from those mistakes, please. Okay, and under expenses, what are some categories? I mean, you can have all kinds of stuff, right? But your biggest one is going to be, advertising / marketing. Then there's all kinds of subcategories you can have under that, right? Online leads or printing, postage, if you're mailing stuff out, whatever, right? You're going to have all these different categories under there, subcategories. And then you're going to have other ones like, office expenses. If you have an office, paper, copier, rent, mortgage payment, whatever it is on your office, if you own it, salaries, if you have, assistants, employees, whatever, car expenses, right? Because your car is an expense to the business, right? Or it should be. And it just keeps going on. There's a lot of those different expenses that you could have or business owner can have in the real estate space. So you account for all those, then you have your net profit. Now, that should be somewhat similar to what your AGI ends up being when you file your tax returns. Okay. Because it's funny, I'll talk to somebody who's maybe interested in joining our team, and we're talking and seeing if it's a good fit. And they go, and I go, hey, what's one of the reasons you're here? And one of the main reasons always, well, when I need to make more. Okay. And it's funny because you can have the whole split conversation about that. It's a whole nother conversation, but then they go, okay, so what did you make last year? And they say number, right? Boom. I don't know, whatever, 50,000, 60,000, whatever. They say something. And then I go, okay, cool. So that's what your 1099 said, or that's what your AGI said on your 1040. And they look at me with like, I have three eyes, like, well, that's what my 1099 said. I'm like, okay, Does your AGI say the same thing? I doubt it because I have write-offs. Okay, you know what write-offs are called? Business expenses.
Mm-hmm.
So that money did not stay in your account. You spent it on expenses. And so therefore you didn't really make that $50,000. You
Mm-hmm.
made less because you had expenses. Okay. But everyone thinks they made that because they don't keep track of their expenses. There's no accounting mechanism for this. And they're just praying every year they don't get audited.
Mm-hmm.
Right. That's not a way to run your business. It's not a way to live. Okay. Life by design. Right. So now let's attach percentages. Okay, so Kelly, so I'm running this P&L. I got everything in. I data inputted everything in. Boom, 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 boom. What am I shooting for here? Great question. What you should be shooting for again, and I go back to the red book, right? I'm not smarter than 80 of the top performing real estate agents in the entire country across all brokerage brands that were interviewed and studied and researched. That's for sure. So I'm just going to go off what they found out, right? And what they found out is now this is 2003, 2004, right? So I think as teams have evolved to be much more prevalent in the marketplace for the real estate industry, I think this is probably, in my personal opinion, changing a little bit, or the expectations should change a little bit. But going back to what the Red Book says, you should have of your gross top line, your cost of sale should be 40%. 30%, sorry, 30%. Your expenses should be no more than 30%. And therefore your net profit should be 40%. Okay. So if you're bringing in $1,000, your cost of sales should not exceed $300. Your expenses should not exceed $300. And therefore your profit left over for you to actually pay taxes on potentially or spend is that $400. And that's an example. Okay. For your personal expenses. Now you take that and you pay your mortgage and your car payment and your groceries and whatever else your light bill, whatever else you have, right?
Mm-hmm.
So that's how it works. Now, I'm sure somebody's going, okay, well, hold on here, time out. The cost of sales. So if I have a buyer's agent on my team, or just an agent on my team that I'm mentoring right on my team, and I'm helping them get started or whatever, right? Or they're with your business or your company for whatever reason, and you're saying they're on a 30% split cost of sale, which means that the company takes 70. Yes, that's what it should average out to be according to all the research with the Red Book written in early 2000s. Now, I think as things have, you have the disruptors in the marketplace now, right? Open doors and offer pads and venture capital and technology and all the stuff that wasn't around back then, clearly, right?
Mm-hmm.
As that stuff has entered the marketplace to be competition, and direct competition it is, I think that needs to be adjusted a little bit, right? Because you can't, it's very, very difficult to keep that kind of margin with commission compression and technology disruptors and venture capital pouring into the real estate industry space, right? So that being said, I think a really good expectation for your P&L should be adjusted slightly. So you have a gross income, you have a cost of sale, and I think cost of sale, if you can operate around 40%, that's still really good. Expenses should still be at 30%, which then leaves you 30% net profit bottom line. Okay. So that's what you should be shooting for. And even that can be challenging. Now, with that being said, to get to 40%, you're probably going to be in production, right? By the way, production means a lot of things to different people. For me, I guess I am in production. But for me, what that means is I work with people I really want to work with. My past clients that I really love and like a lot to be around. And my sphere of influence, people that I meet that I just kick, we have good friends and that kind of stuff, right?
Mm-hmm.
That's who I choose to work with, which is awesome. So I'm not in production from the standpoint of I'm at this point actively
Out there
prospecting and converting.
pounding phones. Yeah.
A pay-per-click lead or whatever, right?
Yeah.
Yes. So now I put in my time. I did plenty of that, years and years of that, right? But this is my 16th year. But able to do the personal production from people you want to do business with, guys, I'm telling you, that is awesome because you're not going to find a higher dollar producing activity you can do in your business than that. Okay. So I personally believe there should be some of that sprinkled in here and there. Now you don't have to do it all the time, but that will help that 30% number on the net profit bottom line increase to hopefully get to 30%. Because if you don't, do any production in this day and age, 40% of cost of sales is going to be tough to achieve, right? Because obviously, if you do a deal yourself, that's 100% to the company. So you don't have a cost of sale, which makes the average, more achievable to hit 40%. Okay. If you don't do anything, I know some guys, gals, team leaders that don't do anything at all. And their profit margin is not anywhere close to 30%. Right. Now getting people to admit that is a hard thing, because in real estate, as you all know, we're giving awards on the gross, right? Oh my goodness, I sold, but no one knows. No one's able to peek behind the curtain and see what's really going on. And there's people out there that buy their way to that gross award, right? Because they just spend money like crazy on leads. And sure, if you have a bazillion leads coming in every single month, you're bound, even if you're not very good at your systems, you're bound to do well on the
You're
gross.
spending enough money, you're gonna make money, but
but you may not actually keep much of
right.
it.
Yes.
And that's not the point, right? So I'd rather have less awards and have a healthy bottom line that I then can use for my personal life, investing, and the future, right? And things of that nature. So that's the overview from a general standpoint of how you should run a P&L in real estate.
And if you're not doing it, get on it. If you can't get, what was it, QuickBooks or Quicken, start with a good old fashioned Excel sheet. And then you will see when you can afford to move that time onto somebody else like Quicken or QuickBooks or something like that, just like Kelly did.
That's
perfect.
Right. That's right.
And go ahead.
I was going to say the other big one too, that I'll just say there's all kinds of percentages broken down based upon your gross you bring in. But the other one that's very important is your marketing budget, right? That's going to be your biggest, it may be your second biggest expense, but that should be about 10% of your gross. So if someone goes, well, you know what? How can I afford that new marketing thing? Well, it's real simple. What's your P&L say? If you're operating at 8.4%, then answer, and it's not, not terribly expensive. The answer is yes, as long as you're under 10%. There you go.
Yeah. And I think that we did talk about your marketing budget in a different episode, I think quite a few ago. So scroll on through wherever you're listening and find that. There will be a lot more detail on how to kind of figure out your marketing budget there, operating within that 10%. And then real quick, I did have a question. So when you talk about your marketing budget, is this, and just because I don't know, is this your marketing to get deals, or are you talking about marketing for the particular house that you're trying to sell? You know what I mean? Marketing that house, or is it all in one? Okay.
That's all of it. Yep. Because they should be intertwined, because the houses that you're trying to market, that you're marketing, right, should lead you to more business, right? It's a natural byproduct. So you should be definitely marketing and not skimping by on your clients' listings you're trying to sell, right? But there's also a different aspect, a subcategory of, you're just trying to get business other ways, marketing your company. Yes, absolutely.
And then one more question with that is, have you seen, since right now in such a hot market, like, is it still taking the same amount of marketing dollars to market a house for sale when they are, flying off the shelves, so to speak, as it did, a couple of years ago when things were moving a little bit slower, the houses were sitting on the market a little bit longer? I guess, have you seen that budget need to go down at all over this hot market?
Yeah, that's a great question. Actually, we know our cost per house to sell on average, right? And what it's going to take, because we do quite a bit. So has that gone down? It has a little bit. That's just the truth of the matter, because they do sell faster right now. So that's why you have smart money like venture capital coming in, private equity coming into the marketplaces across the country in different, cities, trying to take some of that and offering all kinds of discounts on this, that, and other thing, right? Because they know that's the case. Now, that's why it's so interesting to see what will happen when the market flattens out and eventually maybe corrects a little bit, right? What will happen to these companies, because they're operating right now on a very thin profit margin, like razor thin, but they're doing it on volume, right? So it makes sense. And even then, you can argue it doesn't make sense, I guess, because they don't turn a profit. Like, the valuation of these companies grows and grows by Wall Street, but yet they're not making they don't turn a profit. It's unbelievable. But that's the economy, that's the market that we live in right now, right? So
it is going to be interesting when you have to, these houses or these companies are going in just flipping and then selling, but how much work are they really doing on the marketing of the house, or the, getting buyers to come look at the house? Right now, they don't have to do really any work because people just, the need is there. But
not for the house, at least they do. They market the heck out of themselves, right?
Right. Like to sell your house. But how are they getting buyers to that house? Right now, they don't need to do anything, right? But that's exactly, because are they, I guess they are selling or they buy the house, right? And then they are selling it as well.
It means both. And now maybe this is a great segue to the podcast next week, because now there's other options that they're trying to do, creating end-to-end solutions as opposed to just being the iBuyer. So that's a great maybe update we could do next week to talk about that, because there are changes in the marketplace in terms of how these private equity companies and venture capital investors are operating. So but to go back and answer your question, yes, it is taking a little less money to do that because they're selling faster. So the question becomes, what's your number, right? What's the number that you're spending on average typically, and how much has it decreased? If it has decreased, are you aware of that, so that when you go into a listing presentation, what you can maybe deduct your commission down to if you're going to negotiate on this, to still make it a very viable dollar producing activity, and therefore make a profit.
Exactly. And if you have some money left over from what you normally would be selling, using to market the house, well, then you can allocate that money to, your marketing money in mailers or billboards or whatever you want to do. But it's important to know, and you won't know this stuff unless you run a P&L.
Boom.
There we go.
Full circle.
All right. Well, stay tuned for next week, because I'm excited to dive into this. I like having these tried and true methods that we talk about, but then it's exciting too to kind of talk about how the marketplace is changing and keeping you updated on all of that. So I'm excited to get into that next week. Be sure to join us. For now, if you don't know how to run a P&L sheet at all, and you are interested in learning more about how to run that, you could probably reach out to Kelly. Where could they reach you, Kelly?
Yeah, of course you can, guys. Come on. You can text or call at 480-227-2028 or email at info@kellycookhomes.com.
And after you learned how to run your P&L, then maybe you want to start thinking about building a real estate team. And Kelly, where can they learn more on how to do that?
Oh man, we have a great document for you. Just simply go to our website, buildyourrealestateteam.com, buildyourrealestateteam.com, and download the sheet. The document will be sent to you right away to your email and give you the step-by-step process on how best to do that.
And it's important to have a P&L while you build your real estate team as well.
That's right.
All right, guys, we will see you next week. Kelly, I will see you next week as well. Have a great day.
Thanks, Elizabeth. You too.
Welcome to the podcast Selling Real Estate with Kelly Cook, where we will discuss the latest and most relevant business strategies to help you do one thing extremely well: sell more homes. We'll discuss everything from business planning to lead generation and conversion to past client customer service and everything in between. Join us for authentic conversations and nuts and bolts takeaways you can implement into your business today. And now, Selling Real Estate with Kelly Cook.